So over $3 million worth of these highly unusual S&P 500 calls came in last Thursday. You can see here they were targeting the 530 strike, and they bought these at 523.46 and 523.44. So these are quite a bit out the money, especially because the expiration is for this upcoming Friday. So a very short-term expiration. These are very aggressive bets, hence why they are highlighted here in both the gold and the blue. They're highly unusual orders. And the reason I am so interested in these prints is because they require a lot of aggressive upside to start off this week. So I'm going to go over to SPY's chart here and show you what I'm looking at. Remember, they were adding these among this consolidation that we had here, a little bit closer to the end of the consolidation before it broke out. We'll know if they're still holding based on the open interest tomorrow. My expectation is yes, they are still holding. Of course, it's possible that they could have closed them, but I didn't see any sign of them selling later in the session based on the flow. There was a minor call sell over here, but still, this was only 559,000 versus the millions that they bought before. So I believe that the majority of this order is still open at the moment. What I'm looking at right now is a possible cup and handle pattern. You can see here this cup right there as well as the handle, and that's possibly what they might be looking at as well. Now where it gets interesting is if this handle portion over here, which is roughly between 522 to 522 mid, if this doesn't hold, you can bet that these guys are going to get out right away. This is very short-term trading. Remember, we're dealing with a weekly expiration that expires later this week and a very far out the money strike. If these guys don't see the price go in the direction that they want in a timely fashion, they'll hop out right away because these contracts will devalue very, very quickly if they hold on to them. So as traders, we always need to make sure that we are optimizing our risk to reward in any trade, but this is especially prevalent whenever you see these super far out the money strikes in a very close expiration. So this is probably what they're looking at in terms of risk. At least, I don't know if they're looking at a cup and handle or technicals in that regard, but still, and in this case here, what I do in their position is if we see this go back below 522 at any point, Monday, Tuesday, around that time period, then I would cut that theoretical position that they have right here. Otherwise, as long as it can, let's say, maintain around where it is right now, 523, 524, then you're good at least for Monday, but you really need to see this break out to the upside, this cup and handle, or at least potential cup and handle, break out to the upside by around Tuesday midday. If that doesn't happen, it's still possible they could be profitable, but you really are starting to lose a lot of value on the contracts because of theta. Of course, remember, theta is based on the time aspect of contracts. And remember, here we're looking at the weekly contracts for Friday of this week when they expire. So you really need to see this move play out, at least in their favor, within the next two sessions. Otherwise, it looks like this would be a possible failed cup and handle breakout. And of course, when you have a typically bullish pattern that fails, you see an even more so bearish response to that, which is why I'm very interested to see if this 522-ish mid range can hold early on this week. If it is not able to, even if we see consolidation up here and these guys have to get out because they didn't have their desired move, even if we see consolidation up here, it would look like more so of weakness because it did not break out in a timely fashion. Like I just said before, we could actually see some type of a gap fill from this previous gap over here. So it's all dependent on this range right here. We actually saw quite a bit of dark pool prints to end the day on last Thursday. You can see here almost $1 billion singular dark pool print. This is not a signature dark pool print. This is a singular. Pair that with right under it, a $523 million dark pool print. These all came in after hours, about 50 minutes after hours on Thursday. Very substantial overall. Possible sell pressure. We'll certainly know if that's the case based on if this plays out or not. But again, this 522-ish mid-range, if this cannot hold as a support, which is a previous resistance over here, so it will flip to support on a retest. You can see just based on there, and I'll show you just visually so you can know throughout the rest of the video. We had a hard rejection here, end of day, as well as hard rejection around this level here. Not necessarily a perfect hard level, kind of a mini demand zone at the moment, but still, if we can see it hold around here, we're looking at a cup and handle breakout. Otherwise, if it hits below here, we're looking at that gap fill, which of course would be bearish, at least in the short term. So it's all dependent on how price can handle this 522, 522 mid-range, as I've been saying now. And I really don't want to be vague with this because I know that this is just a generalized range. So I'm going to give you what I'm looking at for potential setup. Personally, if we see something, let's say Monday for tomorrow and open, if we see within the first hour it wicks below and then picks up back after on that hourly candle and we close, let's say above 522.40, for example, to be a bit more specific with my level. Personally, since I just drew this out to show you guys a visual, just a general visual, but still, let's say we close the first hour above 522.40 after dipping under within that first hourly candle. That would seem bullish to me. That's a bullish sign that we're able to close back above. And I can take a long position off of that with my stop being an hourly close back below. You could even say an hourly close under, let's say 522 for simplicity's sake. If it goes back under 522, I get out of that position. Otherwise, if it's able to hold this handle portion here, we can see a lot more upside. And also, not only is a cup and handle bullish in the short term in an aggressive fashion, whenever you see that breakout, we also have supportive flow in this case, because if it breaks out, these guys are betting on a breakout, and a very large one at that, since they have the 530 strikes over here with that short-term expiration again. So they're betting on an aggressive breakout, and they would like to see that. So I would also favor that setup if around this range can hold. Now, opposite, if we see a hourly close immediately under or within the first couple hours, under 522.40, under 522, around this range that I've been talking about now for this video, then you're looking at more so of a bearish setup. These guys are likely to get out. I'll also be watching the tape throughout the day to see if we see some selling on these 530 strikes for them getting out of their position. Also, open interest will be key for Monday. We'll know if they're closing out of their positions based on the open interest, since that will significantly diminish if they did close them by end of day of last Thursday. So I'll also be looking at that at the open. But regardless, if we get under here, it stays under there, you're looking at a bearish breakdown. That's a failed cup and handle. Failed cup and handle is very bearish. And not only are we going to see 521 or 520, this is likely going down to around 518 just off the failed cup and handle. Could potentially start a more short-term downtrend if that were to be the case, but it's all dependent on if it can hold up here. So I highly suggest you watch how it trades here between Monday and Tuesday if it's still up here by then. Otherwise, though, one last thing I want to show you for today's video is dark pool levels from last week on SPY. We saw an uptick last week, which is interesting. Then this heightened range we're in right now, we saw 3.6 billion and 2.6 billion and then 1.6 billion, all within about 3 cents of each other on the S&P 500. So 523, let's say 49 for simplicity's sake. And also actually right here, I missed this one, 1.4 billion, about 4 cent range now that we have over 9 billion in premium within this 4 cent range. If we can stay below this and it breaks down below this 522.40, 522 level, you're looking at some decent sized sell pressure, because 9 billion in overall dark pool prints around this 4 cent range is a hefty amount. If that is sell pressure, we're going to see some downside based off of that. It's always good to look for confirmation based on the technicals. Never good to try and predict what this is. We don't know if this was a sell or buy. That's one of the main purposes of a dark pool exchange. So we don't know the intent of the order. That could be masked, as well as for a variety of other reasons like liquidity, for example, can be provided there. But regardless, if bulls can't get above this on Monday or Tuesday of this week, it constantly gets rejected around this range and we get back below 522, we're looking at some more bearish aspect. Otherwise, if it's able to get above this very easily, we can see that potential cup and handle pattern. So it's very dynamic and based on how price trades around these levels. I know it's always fancy and people are looking for predictive paths, which there certainly is a time and place for that. I personally do that as well. But in this regard, we're looking at a very tight range of interest where if we break below or hold above, that's going to tell us where the next large move will go. So I'd rather just wait to see that confirmation instead of predicting beforehand based on it. And this is what I'll be watching for this week. So these prints all in a row, the most interesting of last week. We still had large prints as well, like the 6.1 billion and 4.3 billion at 522.89 as well as 522.90. The reason I said that these are a bit more interesting than this, even though this has even more premium, since it's over 10 billion in premium, is because this level is going to act as a resistance immediately on Monday, since we closed below it last week. So that's why I'm more so interested on this, but still around 523, still a critical level just because of how much premium we saw overall. Again, highlighting the fact that this mini range, 522, 522 mid, maybe even 523, is very, very significant for the trajectory of price going forward from here. So a lot of prints around this range, almost 20 billion, or if 20 billion overall. around this very tight range here, that's going to set the tone for where we go afterwards. Again, very, very rare to see $20 billion in premium within about a 50 cent or so range overall within the same week, especially if you guys have been watching these videos now for a while. It just really is unheard of to see something like that. So this will set the tone for where we go for the rest of the week. I will be watching both of these levels again. Bulls want to see above this. You get above this, clear skies ahead. Otherwise, as long as we stay below, cracks below 522, we can see some more downside. And just to show you guys throughout the rest of the week, really nothing too insane. We saw 5.6 billion, 519.81. It's helped it to prop price up a bit more after that, and then 5.1 billion at 518. Again, I wasn't kidding. We saw a ton of premium last week, a large uptick overall. So definitely some activity in the dark pools. Typically, that's a precursor to a large move in the S&P 500. Just has been the case, especially over the last couple years. So it's in our best interest to wait for confirmation in this case, over or under, and ride with the trend whenever the trend decides after that. But regardless, I will see you guys in the next video.